So welcome everyone down to the SuperEZ beginner call. If you guys are brand new, sorry for some of those of you who have not yet been around. I was kind of in and out the last couple of weeks. I was traveling and then had a birthday and then was traveling again. So needless to say, it's been a little haphazardous. Sorry, I labeled that wrong. Today is the 4th, so thank you. I was looking at my watch and it said 8:05 and I obviously mistook those numbers. So anyways, for those of you guys who don't know, I am just a coach inside of SuperEZ. I am just another person who kind of was an entrepreneur, got really good at business, and I ended up becoming a trader. So from there, I had been with quite a few companies. I had traded, on and off, and I went through all of IML, at the time was the name of the company, went through all their courses and bought all the coaches and did all the things. And ultimately, I was able to find some success. So that was a blessing. But it took a lot of years, and I didn't have a single person that I could kind of go to and ask any questions of. So even with paying $300 a month for the IML membership, they had live calls and stuff, but more often than not, you couldn't get an answer to many questions. So you would pay for coaching, and then of course more coaching and more coaching, and ultimately you just kind of end up spinning your wheels. So what we're doing here tonight and in other calls is hopefully providing you with a platform where you can come and ask your most simple question. I don't care if it's about MT4, I don't care if it's about a candlestick, or if it's about something that's not necessarily SuperEZ related. The idea is that we, the people, can come together and share our knowledge. So I won't claim to know everything, because I clearly do not. But I will just claim to be able to help you a little bit. And there's other people who may know more than me on some things, who most of the time are willing to step up, because we're kind of creating this really open atmosphere where people are free to talk and share ideas and share different things. So having said that, you guys know everything we talk about on these calls is for educational purposes only. Anything, if not your lawyer, your financial advisor, your CPA, your accountant, your tax professional of any kind. So just we, the people, kind of talking and hanging out. I went ahead and added this last, what is this called? Whatever, a slide to this introduction as well, to show you guys that what made me different in terms of my trading career was, again, I didn't start off on Wall Street. I don't know most things about fundamentals, and I clearly can't define a lot that other people who have been trading for, say, 20 years can define. But what I can do is I can multiply a really tiny account and make it grow. So that seems to be where my skill set lies the most, is to take these strategies, apply some really good sound rules and principles. I don't care what the strategy is. I don't care what the rules are. The only thing is, at the end of the day, it has to make sense. It has to be mathematically sound. So once you have that kind of trading plan, this is how I was able to compound really small accounts into large accounts. So I don't know what large is for you. If for you, it might just be that first $10,000 to pay off your car. It might be, $50,000 for a down payment on a house. It could be your 6 or 7 figures, but ultimately, whatever it is, I would implore you to make sure you withdraw at that level. Don't just try to get to that 6 or 7 figures because it looks pretty on the paper and it looks pretty on a screen. Instead, do what's right. Be prosper where you're planted. If you have $18,000 in credit card debt and your account gets to $19,000, please withdraw, because you now have a skill set that says you can do it again. So don't be that person who gets to high numbers and then, for example, $70,000 and then gives it all back, because we make those silly kind of psychological and emotional decisions, especially when we hit levels in life that we have yet to hit. So are there any questions on any of that stuff so far? Or are there any specific questions of things you guys want to go over tonight? Again, anything is okay. I don't care if it's about the cloud, structure, simplicity, candlesticks, just anything. So it's your moment. Otherwise, we're going to go over simplicity and do that. So.
Hello. Yes, I have a question, Jen.
All right, let's start with ZB1 and then we'll go to Art, because I heard that's speaking after. So ZB1, come on out.
Yes. In one of the classes, someone spoke and he was speaking on institutional candles. Is there any way possible that you can give me more insight on institutional candles? I can see, I know that it's somewhat about the equivalent levels of, and the big pushes and things like that. But, how do I identify those and put those into a trading plan, as far as knowing that, okay, this is where the money is, or this is where the reversal will occur.
Oh, sorry.
Do you understand what I mean?
I do. Sorry that it's beeping. That's an alert for Naz. I'm not sure if it's the same Rich is on here or not tonight. I see one Rich. I don't know if he's on here. Oh, he's raising his hand. Rich, is that you? Let's see if that's the same
Yeah,
one.
it is. I'm gonna go over something really simple tonight. I'll help you guys out whenever you guys can open the floor for a couple minutes. I'll give you guys some insight on. I'll go over institutional candles one more time, and then I really want to go over Fibonacci. Like, oh my God, I was taught a way to do it. You guys are gonna go crazy with this.
All right, awesome. Well, hey, Rich, first of all, I appreciate you. I love that when you come out, you clearly have a magnetic voice. And we all do in different ways, but different strokes for different folks because no man is an island. So as for your question, ZB1, I'll let Rich come out and talk about that here in a minute, and I'll let him share his screen. He's super great at doing that, and he just has a really profound way of communicating and getting his point across. So that will kind of be perfect. But I guess until we do that, let me check with anybody else and see if there's anything specifically else that you guys had. Art, you had a question?
Yes. First of all, happy birthday to a fellow Leo.
Oh yeah, there you go. Thank you. And you
Yeah.
too, I guess.
Coming up soon, but thank you. So I wanted to ask about the you do live trading, I've heard, and it's really good, but you're not doing it this week. Is that the case?
So we do mostly live trading in the morning. So the majority of my trading career, I've traded mostly, New York Open. That primarily I live in the US and I have children and stuff. So me trying to catch London, I would do good, but I couldn't do good, consistently. I couldn't sustain that good. So for me in mine, I just found that the majority of the times that my trades worked the best and I could have the most control over it was New York Open, because then I have some time before the London kind of reversal, or like versus going to bed and then you blow an account, and I could watch it, management, and have options. So yes, I
Right.
do live trading, and thank you. It is, it's mostly good. They're not all winners. We take losses just like anybody else, but there's a lot more winners, and we do that on Tuesdays and Thursdays. Sometimes Wednesdays, especially if it's weird traveling weeks. So we do that on those days. That's in the advanced membership group. So when you sign up with the advanced membership group, you get signals from not only Uncle P, but also another trader who primarily trades some form of Ichimoku. And I don't want to misquote and say exactly what it is because I do not know, but his signals are pretty good. They're pretty accurate, and you'll get signals. And then of course you'll get an entire archive worth of all my trainings and strategies, as well as a couple of other cool indicators and things that you can kind of work with and that. So
Okay, awesome. I'm going to go ahead and get started with that in the following week, since I guess you're traveling and stuff, or you're back.
Yep, I'm back. I'm back.
Cool.
Yes,
Thank you.
you are welcome. Are there any other questions in terms of simplicity or anything that I can help with? Because Rich, we all know that guy can talk. He can talk almost as much as I can talk. Maybe it's the Jersey thing, but maybe it's the East Coast thing. So if
Hi, Jenny.
Hey, how's it going?
I do have I have a few questions. My first question before Rich do his thing, are you still going to for the contest? Are you still going to do the I guess it was 5 of us that was going to learn your pivot strategy?
Yep. So I went ahead and I sent out all the PayPals and stuff last week for the winners. So 3 people won $150, $100, and then $50. So the pivot lesson we'll schedule for next week, I suppose, and kind of go from there. And we'll do kind of a just a small group intimate setting, and just go over the entire strategy, give you the indicator, kind of tell you the rules that surround it. And you'll kind of get a whole feel of it, and then practice it and play with it for a little while. And then after that, once you guys have had it for a week or two, then we'll do it live on Tuesday or Thursday morning in those classes as well. Deal?
Okay, looking forward to it. Can you also, I have another question. Can you pull up CAD
Yes, sir.
real quick, please, on the 5-minute?
On the 5-minute, using simplicity?
No, using the golden strategy.
Okay, remember,
I just want to use it as an example. I don't trade it using the golden strategy. I just wanted to see something.
Okay. Now remember, I'm not going to discuss a whole bunch of stuff in terms of that strategy, but I can look at it, with what's on my screen. So
Got you. So my question is, you see how we have the 50 and then we have the other 50 on top. Do you trade in between that, even though it's going in the bull in the upward trend?
Okay, so first thing, remember the first thing I do, and I will say this just like I would on any other call, is I do a top-down analysis on most trades. Right now, the market is different, and this is the new norm. So different isn't even a fair word. This is going to be the new norm for some time. So having said that, I've mostly stuck to a handful of pairs, so I can afford to do a complete top-down analysis, just like I do on Tuesday and Thursday mornings, where we go to the day chart, we kind of look at structure on all the different time frames. We get a good idea of targets and locations in terms of trend lines and support and resistance, and we know kind of what's happening with that pair as a whole. And then by the time we get down to those smaller time frames, we have a more clear picture. So that's what I would do no matter what the pair is. And now to answer if I would trade in between the 250s, well, the answer is yes, obviously, depending on did it break a trend line? Do we have a momentum candle? Right? Some people have added the cloud. Some people use Fibonacci. You can use that strategy with anything that you see fit as confluence. But for me, my confluence are the rules that go with that strategy. And you already know those. They're pretty simple. And then, of course, we want some kind of a momentum candle. So that means an engulfing candle. I'm sure that Rich will kind of go over it and call it. A few weeks ago, he was calling it institutional candles. But I call those just big candles. We'll use my girly terminology, not professional, and just say big candles. We want something that broke a trend line. And if you're going with the trend, so like if we had saw that trade, for example, let's just drop a line. Let's say we saw this trade somewhere in here, okay, at this orange line, just to give you an idea. Well, just at first glance, this is going up. So before I look for a sell, I want the retest, right? So if you're going with the trend, the retest isn't nearly as significant because you're with the trend. Any pullback is reasonably safe or safe-ish. If you're looking for the reversal, and that's what simplicity is, that's what the triple arrow system is a reversal system. It's a counter trend trading system. And then that's how to kind of classify it. Those are the times when we don't want to just take the breakout. We want the breakout and then the retest. And that's what this is. This is your retest. So we were up, if I were to draw a trend line, it's just a beautiful trend line. We broke the trend line, but then we retested it. So yes, I will take trades in between 50s. I'll take trades that are in messy areas. The parts that I avoid are if I can draw a box around it and it's kind of bouncing in that box, I don't want to play. I try my best to avoid consolidation to the best of my ability. And my rule to take a trade out of consolidation is very similar. Again, we want the breakout and then the retest. Without the retest, you're going to be one of those people, just like I have been, who takes this fake out kind of breakout and then of course loses. By the time you get to this next sell, which obviously is perfect and beautiful and is going to get you lots and lots of money, but then your little feelings are hurt. The psychology is wrong. It's too much, and a lot of people miss the winning trade if you keep taking all the wrong kind of fake out breakouts on consolidation. So
okay, that helped a lot. I have one last question, and I'm pretty sure you covered it. It's kind of basic. When you looking at the trend on the higher time frames like the H4, the D1, and then you go to the 5 minute and you see it going in a different direction, which trend are you I guess following, or are you going off the trend you plan on entering on?
But in short, the trend I plan on entering on. So in short, that's the shortest answer. But here, this is not a fast moving pair, right? This is not fast moving at all. That's 30 pips. This is approximately 40 pips. So there's plenty of room to make some money on either way. So let's say this is a perfect buy and a perfect sell on the 5 minute time frame. You can get your 30 or 40 pips easily, even if the uptrend on this is clearly up. So the bigger time frame is clearly up. It doesn't mean you could not have gotten a whole bunch of pips, on all of these pullbacks, but you just have to trade them accordingly. So don't trade it hoping to hold it forever. Trade it knowing that you're getting in and getting out, like a scalping strategy would call for. You're not looking, as tempting as it is, to catch this big run. You're looking to catch a consistent 10 or 20 or 30, or if you're using NAS or US 30, then you're looking to catch that consistent 100, 200, 300 pips. And even if you could have got 1,000 out of it, we don't care about the 1,000. We care about our consistent ability to catch our 300 pips, right? Or whatever it is.
Thank you, Jenny. You're the best.
You are welcome. Thank you. All right, I'm going to check the chat. Is there anybody else? Because I'm going to let Rich come on. Let me tell you.
Yeah, hello, Jenny. It's Tony here.
Hey, how's it going?
Oh, I'm good. Thanks. Yourself?
Fantastic. I'm blessed and happy to be here.
Very good. Just a quick question. How do you manage a trade once you're in it and you've done your analysis, set up your stop loss, and your trade starts coming back towards your stop loss? How do you manage it yourself? Do you just set it and forget it? Or because I have a bit of a trouble, I do my analysis, I take a trade, and just say I put a 30 pip stop loss on there, and I'm going for 30 pips for 1-to-1, and it starts reversing back towards my stop loss. Sometimes I think to myself, well, hang on a second, it's reversing back. Oh, I can get out of this trade and take the little reversal back and pick up those pips or gain those 30 back or whatever if it looks like it's chucking reversal on me. Do you actually manage it like that, or do you actually just set it, forget it, and if it comes back and hits your stop loss, it's a loss and just move on?
Okay, so I hope you write this down, and not to sound too over conceited, but it's important. So I hope you have a pen and paper. There's a lot of schools of thought. There's a ton. So, and I'm not going to dare tell you that one way is better or the end all be all versus another. So there is an advantage to saying, hey, I'm going to take this trade. This trade has a 2-to-1 or 3-to-1 risk to reward ratio. I'm super confident if it hits my stop, that's fine, my full stop. And if it hits my full take profit, that's fine. There is an advantage to that, because you're going to have, as long as you're trading with sound rules, again, goes back to that principle, you're going to have larger wins and smaller losses. Your risk, your overall percentage is going to probably be somewhere, hopefully above 70%. And that is profitable if you manage to do that for 50 to 100 trades. Now, I would have rules like that and add something on the lines of a trailing stop, or something on the lines of, let's say you took a trade, but then you went to work, or you took a trade and then you went to bed. You'd say, hey, when I check my trade at lunch, or when I check my trade, before I went to bed or when I got up, if I'm, more than 20 pips up, I will protect it per 5. Or if I'm more than this percentage of pips up, I will protect this many. And I would also have some amount of rules in place that say, I will trim off 50% of the profits when I hit half of my take profit. So when I hit, if I was going for 50 pips, for example, when I hit 25, I can take off, half of the trade. So what I did, though, personally, was I did it overcomplicated. Now, granted, again, I didn't know better. I didn't know what I know now. But at the time when I first was able to learn how to compound effectively, I ended up doing 4 trades of the same pair. So for example, if I took an odd CAD sell right here, I would have 4 of them. And I would, if I was risking 10 or 20% or whatever my account that I was risking, the full 10% would be split in between all 4 of those. Okay.
Yeah.
And there's a spreadsheet like that that's in the group. My first one would be the heaviest position. And that one, I would have it to where it closed out with the smaller amount of pips. Okay. So I was almost, I don't want to give a wrong number, but a lot of the time, like I'm pretty sure it was more than 90% of the time, I almost always hit my first take profit, which for the most part, that didn't make me money at the end of this, long amount of trades. It protected my account from the ones that took losses. So and then I had my second take profit was I had 17, I did 33, 44, 77, and then, or I let one of them be a runner kind of thing. And the idea was that 75% of my trade would be closed prior to 40 pips. And the reason I did that was because I was told, now granted, I didn't know any better at the time either, but that the triple arrows were based off of a 40 pip pullback. So I used that information and kind of created these rules. And then I actually just stuck with them for, I don't even know how many weeks it was. I think it was less than 12, but that's how I was able to do it. And now that I've spit all of that out, I'm going to go on to the rest of it. So sorry. In this market, I don't know what you're bringing to the table, but I would definitely recommend you protect your trade. And it's a hard game to be in, because for example, if you took, here, let's get this out, and it's kind of zoomed in, it's kind of ugly, but bear with me if it will let me. Okay. So let's say you took this trade. Clearly it's a beautiful winner. I mean, it's, 300 pips on a slow moving pair, but if you protected it when you were up, you got knocked out immediately. You got knocked out immediately. You got knocked out immediately. If you had a trailing stop at all, you definitely did not get those pips. You got,
that's what happens to me a lot.
a small percentage. So of the people who've been willing to share their trades more recently, who are willing to kind of drag and drop their entries, which I'm telling you guys is the best way to learn for those of you who are willing and listening. I know it's hard, but come on out, drag and drop your entries with me live. We'll analyze and we'll go over what you're doing wrong, and we'll give you those little tweaks to help you get to the next level. So from my experience, even myself, you overprotect and then you get nothing, or close enough to nothing that it's like you're fishing in the dark. You're getting nowhere. You win some, you lose some, but at the end of the day, you didn't make any.
Yeah. So my strategy is I shoot for 30 pips a day, whether it's one trade, two trades, or whatever. That's my target. So all I'm shooting for is 30 pips for the whole day. That's it. Then I'm finished for the day. Because my strategy is, if I can get consistently getting 30 pips all the time, then I'm just going to build my lot sizes up, and that's all I need to shoot for. So I'm not sitting at the desk all the time on the computer. Minimum time, sort of set it, forget it, and that's what my strategy is, sort of thing. I'm not worried about the big runners that pick up 200, 300. Okay, fine. I've tried that. I've tried using simplicity and going down that road, and I find that when I leave trades on overnight, 99.9% of the time I wake up and I've had a loss. Be it trailing stop's been not quite activated, or something that's come back and I've had a small loss, or it's come back and hit me stop loss, one of the two. If I've left the stop loss where it was, just let it run and not protect the profit, and just let it run, and it's done a big reversal and come back, knock me out. I don't have much success in leaving it overnight, so therefore I've changed my strategy to in and out quick, 30 pips, that'll do me. So I'm just trying to get consistent at doing that, and just wondering about that. If I see it coming back against what my trading analogy was, do I close it and take what's offered to me on the coming back rather than going up, say, and then just re-enter it again, or have another look at it, see what I've maybe missed.
I think that focusing on, okay, fine, you got your 30 pips, and then you can always take a re-entry is a really good thought process. So the last thing I'll leave you with is, if you want to have a consistent strategy like that, I would go closer to a 1-to-1 risk to reward ratio, or even 2-to-1. But the farther you try to stretch that, the worse you're going to get. So you're not going to hit your full take profit very often. And again, you're going to hit so many of your stop losses that it will take a wash on your wins. So for me, I would say go closer to a 1-to-1. 1-to-1 doesn't even need that high of a winning percentage to be accurate. That's the first thing to go for, is either 1-to-1, 1-to-2 at the most. So if you have a 30 pip take profit, it's a 60 pip, whatever. So, and then last but not least, we have a gentleman in our group, in the other group, who's building a trade manager. At this point, it's second to none. So if you've worked with me at all, you know that I work with this ATR quite a bit. Much of my trading journey has been using this, or I checked, let me see if I can't mute whoever's got the fussy noise. Mute. There we go. Figured it out. But I use this ADR quite a bit. So not knowing how much a pair moves every day is catastrophic. So if you're trying to go for 100 pip take profit on something that barely moves 30 pips in a day, you're not doing your due diligence. And then vice versa. If you're only taking 30 pips out of a pair that moves 150 pips a day, you're leaving a lot of money on the table. So having a stop loss or take profit based off of the ADR is a super good way to trade. Because then any instrument you trade, that means it could be a stock, it could be an index, it could be a Forex pair, you're going to do phenomenal. So if your stop loss, for example, is 1.5 ADR, if your take profit is 3 ADR, then you're always going to be consistent. It's going to be a lot more duplicatable across pairs and across instruments. So, and that trade manager that we're working on right now in the other group isn't ready to be released yet. It's still in beta testing. But even aside from that one, I would suggest a trade manager is actually worth your money. Most tools, most indicators we buy come and go. This group happens to come with a great group of people, which is kind of nice, who we hang out and we do live calls and stuff. So that's obviously nice. But most indicators you buy, you try it a few times, you win or you lose, and then you never touch it again. Whereas a manager, something that gives you information, is probably the best bet you can actually spend your actual money on. So
yeah, I've seen in the group where you're actually testing the manager, and I've just been biding my time until most of the bugs are ironed out before, yeah, when it's released sort of properly, because that does look very, very good instrument to have. So it can take a lot of stress out of it as well. Yeah, thanks for answering all those questions, Jenny. Thanks very much.
you are welcome. All right, any other questions, comments before I hand over the floor? Connie, is that you? They're unmuted. I don't. Going once? Anybody at all? Going twice? Okay. Well, Mr. Rich, are you there? Let's see if you.
I'm here.
All right, I'm going to stop my share. Yes, guys, this is being recorded. Your screen sharing is paused. There we go. So in theory, you guys should be able to see that. I will, everything stopped, and then it'll go straight over to Rich. So how are you doing out there anyways?
New York City's good, you know. I don't know, they can't hold us down, they can't keep us locked down, so it's kind of like, it's crazy. The mayor's going crazy, the governor's going crazy, but we're here, you know. Yeah. So I'm like, I kind of wanted to go over a couple of things today because you know, it really changed a lot of things for me. So the one thing I know, Tony, the frustration you're going through, I've been there before. I've blown demo accounts like you can't even believe. Thank goodness they were demo accounts, you know. And I've also blown some live accounts as well. Now that I've, you know, reached beyond, and I'm lucky to have Wall Street in my backyard, so that's kind of like a good thing because I have a lot of friends that you know, that work there and or know people that work there and they've connected me. So I've been pretty lucky on that, you know. But of course, nothing has been for free. You know, I've dished out. I think I'm going close to $10,000 now. But to me,
Wow.
it's been worth it, and I'll tell you why. Because I have actually, I turned a demo account in the last 3 weeks from $200 to $3,000. So just, you know, just to let you know the magnitude of what I've now been able to do. So that was a big thing for me, you know. And yeah. So it's like, it's kind of like, you know, I understand your frustration. I know where you're coming from, where you think something's going right, and all of a sudden it just kind of like, you know, you get like totally sidewhacked, and you're like, oh my God, now what did I do wrong? So
yeah,
what I'm going to show you today it's going to be something that I think is going to really open your eyes a little bit to now being able to pinpoint something. And also to answer, I'm sorry, I didn't get the other gentleman's name, but to answer his questions on institutional candles, we're also going to go through that. That's going to help you also to identify patterns, okay? So institutional candles is literally where our, you know, our big institutions, our hedge funds, and all the big guys are getting in. That's where they're getting in. So they're getting in these institutional candles they created, okay? So I'll give you an example right now. If you guys are looking at, for example, these candles here, this is us. That's us retail traders and us little guys, okay? We cannot move candles like that. We can't do that. That's impossible. Because like all this is like accumulated literally. And you see the movement, it's pretty quiet, it's pretty slow. You get a lot of wickage because you've always got, you know, you've got people saying buy, people saying sell. So you've got, you know, this is what makes wicks, where there is a disagreement, and then the candle starts out going bearish, but then all of a sudden switches up bullish because more people got in as a buy. So this is why you're seeing this. Now, when you see this, that's an institutional candle. Nobody can cause this movement like this on one candle that is not a couple of $1 million to $1 billion, you know, being like,
and that's a lot of money.
Yes, correct. Those movements are what's called institutional candles, and those are the ones that you really want to pay attention to. The other thing you'll notice is that on institutional candles, whenever you get institutional candles, you're going to see a movement, right? And that movement is going to be pretty much something that is used to take out liquidity. So, you know, we spoke about that last time, where liquidity is basically something that gets gathered up. I'll give you an example again, and then I'll show you the institutional candle. So for example, right here, okay? So this is liquidity here. So what's happening in this area? This area here, liquidity is being built up. So the market takes it up. As you can see, this is an institutional candle here. Even though they're not together, it's still considered institutional because of the magnitude of the candle. So what they did is they turned the market around. Everybody's like, oh my God, buy, 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 buy. So they get in here, right? And then all of a sudden, as soon as they have enough liquidity, right? So we'll label that so you guys understand where I'm coming from with that. So all this becomes liquidity, right? Incoming mail. Basically, liquidity is where you have people throwing money in, stop losses, buy orders, sell orders, all that gets stuck in here, right? And as soon as they think they have enough, because they can't get into the market without your money. You got to understand that. They cannot get into the market without your money. Right?
So our money is like a bank to them.
Well, this is the thing. If they're going to buy, who's going to sell? You know, who's gonna buy their orders? That's the question you got to ask. So the moment you start asking yourself, where is the money? Money pockets, like this. That's when you're going to start being able to say, I know exactly what they're trying to do. Once the market turns around, right, you got to pay attention. Once you see it go up, you got to really pay attention, because once it turns around, this is what they're going to do. They're going to swipe all this money away. That's exactly what they're trying to do right there. They're trying to come in here and boom, get rid of that money, because then they can get in. If they don't swipe that money, they're not getting in. You see what I mean? They pass through, and all of a sudden now from here, like literally from here to here, that's them executing their orders, and you're paying for that. So literally they're putting their order in and you're buying it or selling it, you know, whatever direction it is. And then all of a sudden the market turns around, as you can see. So this is what you're looking for. Where's the money? And as soon as you see them take that money out, that's when you can get in, because you're getting in with them. Hence the big candle right here.
Yeah.
You know what I mean? So you got to really, you really have to, you really have to start to understand the market and understand what they're trying to do. Because once you understand that, you're going to get in with them, and you're going to latch on like a pit bull, and you're just going to literally ride with them instead of against them. See, if you were to get in here, right, and then you go up, they're going to try and take you out right away. You're going to go up, let's see what we have here. You're going to go up 200 pips, because this is a 4 hour. You're going to go up 200 pips, and most people's thinking is, okay, you know what, I'm going to leave it because this must go further. And it's not the case. You know what I mean? If you get in down here, that's another thing, if you're that lucky. So that's what institutional candles are. Institutional candles are, you know, these big guys over here, you know, the ones you see literally on every corner. Every corner you turn, anytime you see a big candle, that's them putting their money in the market. So this is where you want to pay attention, because these are the spots that you want to make sure you start to pay attention to get into. Now, as far as accuracy, now this is what I'm going to go into now, which is like Fibonacci, and I'm going to show you a great tool that I found out from one of my Wall Street friends. He, you know, this guy, he's amazing, and he's just throwing secrets at me. So Fibonacci, I want to show you guys something with Fibonacci. Okay? Fibonacci is such an important tool, and the reason is because it's telling you what the market's literally going to do next. So, for example, I have this this tool here. This is Fibonacci, right, on the daily. So what I want you guys to get used to is always do top-down analysis. If you're not doing top-down analysis, you guys are going to mess up on your analysis. All right. So what exactly is Fibonacci? So Fibonacci literally tells you levels, right? And everything in nature pretty much follows it. We already heard the whole story about Fibonacci and whatnot. But how does this play in part with the market? So with the market, I'm going to show you, I'm not going to show you GU because GU right now is it's almost to the top, but I'm going to show you how Fibonacci works, right? Fibonacci, right? When you set your Fibonacci, and I'll do it also on MT4 so you guys can get used to how it works. But Fibonacci, right? If you get Fibonacci, what ends up happening is Fibonacci, as you know, the market is always traveling in an A, B, C, D pattern, right? So literally, writing. All right. So the market always travels in an A, B, C, D pattern, right? Your A is always going to be a little bit lower. And then it does the same exact thing when you're traveling on a downtrend, right? So it goes A, B, C, and D. This being your A, right? And then, oh, I can't write. Okay. This is your A here, right? This is your B. This is your C and your D. No matter where you look, you're always doing that. You're always doing that. It doesn't matter uptrend, downtrend, doesn't matter. So this is how Fibonacci plays a role on this, because Fibonacci is going to help you to understand where you are in the market. Because, like before, if you ask me, where are we in the market? I couldn't answer that question for you. I'd be like, I have no clue. And if you told me what's your next step, I'm over there looking for the triple arrows and see where they are. And that's, and that's pretty much where I was at with trading, right? But if you start looking at Fibonacci, and it's going to actually pinpoint where the market is for you. And I'm going to show you right now how you can do that. So, okay, here's a big example, right? So here goes your A, B, C, D structure. A to B, here's your C, and then here's your D. Now, if you look at, the reason I like this software I'm using here is because it actually gives you the color coding. So if we look at the example that we have on GBP US dollar, you see here, if I amplify this a little bit, I'm going to be able to show you guys the levels, right? And I'll let you guys copy this as well. So the levels that I use are literally the 100, the 0, right? Everything in between, which you already know. It's the 23, the 38, the 50, the 60, 1.8, the 786, and the 860. And then on the bottom, I'm using the 1.108, the 127, and the 1618. So if you start to analyze the market, whenever you get your A-B swing, your C is always going to be your consolidation, right? You understand that, right?
Yep.
It's always going to work that way. It does not work any other way. Your C is always going to be your consolidation. There's no other way it works. You can't have an A, B, and then all of a sudden, it happens sometimes, but it's very rare where you have a C and then the market dips down to its extension, right? So if we look at this here, the reason I like this is because it's color coded, so you know where your extension is. If it lands, if your C, right? Let's just say, hypothetically speaking, this is your C over here, right? If this is my C, right? Now, I landed in between the red and the blue, so basically the 618 and the 786. I know that my D, my extension, will be somewhere along the lines of this, right here. This is where the market should, right? Hypothetically speaking, with Fibonacci, this is where we're headed for, right here. And I'm going to prove it to you on MT4. I'm just using this because it's color coded and it's easier to see, right? I'll prove it to you guys right now when we go to MT4, because I've been doing this for the last 3 weeks and I've been getting them. It's insane how good I've gotten. So this is what I want to show you too. I got an example also on gold here. So gold, this is a beautiful example because it played out. Okay, here we go. This is my AB, right? Your C is always going to be consolidation. So when we're looking for the C, right? The first rule, right, that you want to learn about Fibonacci is that, number one, your first rule with Fibonacci is your AB border cannot be broken until the C is formed, right? Okay, so that's the first thing. So this is my B and this is my A border. So you don't want to break that. If you break that, that means that, the pattern failed, and then you gotta, it's going to give you a brand new AB. So literally AB forms, now you're waiting for your C. So our lowest point right here is here, this wick, because everything else is higher, right? So we already formed our C very early on. Our C came in at the 5-0 or the golden ratio, right? Incoming man. Does everybody see that?
Yeah.
Our C came in at the golden ratio. So whatever happened between the A and B, it came down. This is the lowest point that you can see on the chart between the AB border. Everything else starts climbing. Everybody see that? And then you see that the B, after the B, the C formed at the golden ratio. So the 50 and the 60. So like I'm trying to kind of get you guys to see red for red. So what's our goal? Our goal is for the D extension to be all the way up here, or at least within 5%. That's the rule. So again, nothing can be perfect, especially in Forex. Nothing is perfect, but this is our goal. At least 5%, you know, within the 1618, which is red for red, the extension of the D. And as you can see, we're heading there, right? I figure with the next thing I'm going to show you that it is going to go up there. I'm figuring about 100, I'm sorry, not 100, 2000, maybe 75 is my target. It might even go past the 618. There's a reason for that. I'm going to show you that next. But this is Fibonacci. Everything in the market flows in an A, B, C, D pattern. Everything. Everything. Everything, in case it wasn't clear, okay? So everything is A, B, C, D. So I'm going to show you guys now with live examples on the market on MT4, which I think you guys will enjoy. All right, so let's see some of the trades that I took. Euro, okay.
Quick question.
Yeah.
On the, you say A, B, C, D. So
Yeah.
when does it like when is the cycle? Because if it because I could picture this. Okay, so
I mean, I'm going to show you right now.
that mark.
The
Okay,
triple
all right.
arrows. Yeah, the triple arrow is what helps you.
Okay.
The triple arrow is what's going to tell you where most of the time your A and B will be. That's the thing I love about the triple arrow system, why I won't switch it. All right, so here we go. I actually, you can see I plotted it out. So I have my, let me actually make this lighter so you can see it. So I did this trade and I got into it.
Yeah, it's not showing MT4, Bill.
So, all right, so this is MT4, right? Now,
No,
our AB,
can't see it.
say again?
Can't see it.
Oh, you can't see it?
No,
Okay, hold on.
I can see it. I can see the other chart we're drawing on, but not the MT4 platform.
Incoming man. Okay, let me see. I think it's
The smart trader up.
let me see if I can, yeah, it's for some reason it's not letting me switch over to the MT4. Can you see it now?
No,
Huh.
I'm still trading view.
Okay. Here we go. Is that it?
there you go.
Okay, cool. Okay, great.
Yeah.
So, all right. So this is Euro GBP. So you always, like I always tell you guys, you must do top-down analysis. When I get into the monthly, right, the first thing I look at is where is the market going, and as you can see, it's going on an uptrend, right? Okay. The second thing is the weekly. It's just a quick look on the weekly. You want to make sure again if it matches, right? And as you can see, it is on an uptrend, but then all of a sudden now we're starting to come down. And I'll explain that. So now I go on the daily, and on the daily chart is where I start to plot my Fibonacci. And this is where, as you can see down here on the arrow dash, this helps me a lot too, because it tells me, okay, the monthly starting to go on a downtrend, the weekly and the daily. So now they're all matching, right? As you can see, the monthly, I guess when I was looking at it, the monthly is starting to go back on a downtrend, right? So that's what this will tell me. So when I go on the daily, I'm going to plot my Fibonacci. So here's my triple arrow, right, from the last time, right? It's already completed, and you know, like the one thing that I'll show you on the 4 hour is you got to be careful when you see the arrow not to just jump in. And I presume it's going to be the same thing with simplicity, but I think they moved it over with simplicity. So I'm just going to give you like kind of like a I would say like a cheat sheet to know when to really jump in. So if you look at the D, right, at the daily. So we're going to go ahead and look at the arrow that came out previously, right? That came out, the arrow that came out, because you can see this was on an upswing. Then all of a sudden we had a reversal with an institutional candle, right? A very large up candle with a wick, and a very large down candle with a wick, and another down candle with a wick. These are all institutional candles. That's your giveaway. But now we know that's AB, right? So now all of a sudden we're here, and now I know this isn't color coded, but you know, we have our extensions here on the bottom, and this is how we're going to do it. We have our A and B swing, right, on the daily. Our C would be the highest point between the A and the B border, right? I'm going to do it over just so you guys can see me do it myself. So, all right, you take your Fibonacci. I'm going to go from low to high. The reason I go from low to high is because I want the 0 to be on top, which is where we're beginning. So the 0 to 100, right? That's the A to the B. Now, what I'm going to do here is I am going to check for my C. It has to be within this border, A to B, 0 to 100. So my C, the highest point that I can see is right here, right? That's my C. That's the highest. You can even see it from the support level. That's the highest you've gone. So now what you can expect is from here, the market will make a downtrend to the bottom here, to about the 1.270 or the 1618, right? Now, this has to coincide with my 4-hour, which is going to be my entry. This is where I enter, right? So now we go down to, now once we set this, you say, okay, I got an AB, my C swing is here. Let's go to the 4-hour and see what's going on. And if you look at the 4-hour, right? If you look at the 4, I had to shrink it down a little bit. If you look at the 4-hour, scroll lock. If we looked at the 4-hour here, right? We got our AB swing, right? When we are at the bottom of our AB swing, it gave us an arrow, a triple arrow, which was good, a big arrow, I should say. The big arrow brought us up, and now here is our C. The C, right? Look at this. The C came out exactly where we had pinpointed it before at the 38.2. And now it's going to go all the way down to the bottom. You guys understand what I just did, or any questions on that? I'm going to go through it one more time.
I would like to see that again. Yes.
Sure. All right. So I'm going to, like, the thing I do now is I skip going to the monthly and the weekly because I already have this. I like to mess with pairs that are all coinciding like this. You get what I mean? If they're not like this, I most probably won't do it, right? Now, the next thing I'm going to do is I'm going to come to the daily because I already know the monthly is downtrend, the weekly is downtrend, right? And I actually can confirm that here too. This is my monthly. If my monthly says it's going down, right? That means it's going down, right? So I already know that this is a downtrend, right? So the monthly's on a down, the weekly's on a down, my daily's on a down, and so is my 4-hour. So what I'm going to do is I'm going to go to the daily. I'm going to find my big arrow. I don't even use the triples anymore, right? I just use the big one. So my big arrow here, I'm going to go ahead and take the Fibonacci. I'm going to go from low to high, right? From low to high. I'm going to measure that like that, right? So from low to high, this is our A and B, right? Please recall that the A is going to be your 0 and the B is going to be your 100, right? That's literally the bottom of where that impulse leg was. See this impulse leg? The bottom of that impulse leg is your B. Now what we're looking for is, now we can actually now tell what the market will do. Now, again, we're not going to pinpoint it because that's virtually impossible. If people could do that, everybody will be rich, right? But the point is that now we can tell what the market's about to do. Now we know that because the market already formed an A and a B boundary, The market is now going to look for a C, right? And what is going to be the C? How do you know where the C is? The thing is, the market's going to keep going up, right? Looking to make a C point, which is going to be its highest point between the A and the B boundary. And then it's going to drop down, right? It's going to drop down and meet its D extension, which should look like this. The D extension will be down, right? So A, B, it's going to make a C. We don't know where that is. We have to be patient because the market consolidates always when creating a C. So once it makes its C, which is going to be the highest point between the A and B boundary, then all of a sudden you know the market's going to start to turn around there and fall. Got it?
Yeah, cool.
This is going to help us
Rich.
pinpoint where we are.
Rich,
Got it.
how do you get
So
D
where's
to
the
100?
entry?
I'm going to show you right now. The entry's on the 4 hour. I'm going to show you right now.
When you said you draw from the lowest point, are you drawing from that resistance at the bottom that it made or a candle?
No, the lowest candlestick before it turns around. So this one. You see that, right? The reason I draw the lowest candlestick is because once the market shifts and turns around, that is no longer a boundary. See how the market came straight down and then all of a sudden went up? So this is my lowest boundary. If you try to do it here, you're going to be inaccurate. It's going to be inaccurate.
Okay, I just couldn't see where you drew it from.
Oh, okay, yeah. See the one right here. So the lowest. So basically, A to B, the lowest point before the market makes a U-turn. So you don't want the market to make a U-turn because if you count the U-turn and you go down here, it's inaccurate. You're going to be off by a lot of pips, and that you don't want because then it's gonna mess you up. But so the point being, like, if I was to try and get into a trade here, this is what I'm gonna do. I already know this market is going down. Why do I know that? Okay, so first of all, we're on the daily, right? So on the daily, look at the previous arrow. You see this arrow right here, the green one? The market, this is what is in here, guys? Tell me what's in here. What is in here?
Liquidity, the cash.
Yes, money. Well, that's my money. That's my money. My money's sitting right here, right? So what's the market's gonna do? It's gonna try and go down there and take that out. Hello. You know what I mean? That's how you know A, B, C, and D to take out this liquidity. Capiche? Now I can even go a little bit. I can go a little bit further here. Look at this arrow, right? That was the A, B, C, and D extension, right? So when the market, right, when the market came back up here, right, it made a new A, B, C, and now D extension. What was the goal of the market, right? The goal of the market was to take out this old liquidity, and it did. Boom! Before turning the shift around on the trend. You're starting to see what I'm saying?
Yes.
Okay, let's do it. Let me just put a plot for you, right?
That's
So,
crazy.
okay, the market comes down. This is the first U-turn, right? The market comes down, that's the first U-turn. A, B, you just set your A-B boundary. A, B, here's your C, right? The highest point between the A-B boundary, and look where your D is, the 1618. Passed it, it passed it. The triple arrows would have come up here, here, and now here. That's why you got to be careful when you get in. You can't just get in because look what you're trying to beat. You can't get in here. Yes, it's going to pop up right here, but you can't get in there because it's not done. It's not done. And it also, I'm sure the big arrow also came out over here. It's not done. You still got money sitting here. You can't do that. But now, once it passed the 1618, boom, took out all that money and took off, left. You get what I mean? So you're going to see this pattern repeat itself over and over and over and over and over and over and over all the time. It doesn't stop. Set your AB, look for your C. It's going to be between the A and the B border. The A and the B border are your 0 and your 100 from the fib. Once you set that, look for your C. You're not going to know what the C is, but the C is basically the highest point between that. The highest point between the AB. It can even go all the way up to the 23.6. You know what I mean? So like,
Yeah.
once you know the high and the market starts to go below that, that's how you know the high was set. The market starts to trickle down after that, right? It's going to have a little high. Once it does that high, you're done. Once the market goes down, down, down below that high, that's your C. You just pinpointed it. And then you can get in at any retest of the lower support, below, kind of like what I think what Uncle Pete calls that the stairmaster, right?
Stairmaster, yeah.
Yeah. So once you know your C, get in on the next support, because that's going to take you all the way down. And look how many pips this is, guys. Look at that. You're talking about 800 pips. Now, how do you know when to get in? Of course, that's your next question. We go down to the 4-hour time frame. Look what's in the 4-hour time frame. Here's your AB, right? Well, the 4-hour time frame gave you an opportunity because we went below, right? Below the AB, which is okay. And look what it gave you. Now, it gave you an opportunity to get in between the B and the C, which the triple arrows does do that a lot. Look how many pips that was. That was 490 pips. But, okay, you're just starting to do this strategy. You don't want to mess around between, right? I get you. That's how I was in the beginning, right? I was like, oh, man, I wasn't confident. But I damn sure know that between the A and B border, all right, let's forget about this arrow. I'll ignore that one, right? Because I'm a beginner, right? I know that between the A and B border, I'm going to get a C somewhere. Look what pops up. Remember I told you? I told you guys that this over here was going to be your high, your high of the C. This one right here, right?
Yep.
That's the highest point. Let's go down and check for it. And where is my C? Bingo, right there. That's the red arrow. Now check this out. Okay, maybe if I didn't have the triple arrow system, I wouldn't get in here, right? But once I know, right, that this is the highest point by looking at the daily, I say, okay, well, that's my highest point. That's the C. I'm sure of it. Great. Okay, so when we go to the 4-hour and I don't have the triple arrows, right? Or I don't have the big arrow or whatever, or I missed it. Let's say I missed it, right? I'm going to wait for a retest in order to get back in. Now, the market, like I told you before, will go down to beat this liquidity that's sitting over here. So you know that for sure. And it's going to go down, and it's going to go down to at least the 1618 or past. Questions? So remember, always agree, always agree, always agree. Monthly, weekly, daily, 4-hour have to be in agreement. Secondly, go down to your daily. Do your homework. Don't be lazy. Do your homework, right? Plot your chart, just like I did over here and just like I did over here. AB boundary. Look for your C, and the D extension is all yours, right?
So I have a question.
Yeah.
Okay, so so at the turnaround candle, you draw from the bottom up. Is it always from the bottom up?
Well, here's the thing. Which way is the market heading?
Down.
Okay. So if I put my 100, if I go from top to bottom, right, the 100 is going to be on the top, right?
Okay.
So I don't want that because I want the market to follow order, right? So the market, right, as the market is heading downward, I want my 0 to be on the top. And I want my 100 to be at the
Connie,
bottom.
I'm gonna have to remove you.
You get what I mean? So,
I'm sorry. Something just happened. I'm sorry about that. That wasn't me talking though. Okay.
I'm gonna interrupt real quick, gentlemen. Connie, I keep unmuting you, but I keep remuting. I'm gonna have to remove you if I can't get you to mute yourself, please.
I think she left.
I'm sorry.
oh, no worries.
All right, go ahead, guys.
Okay, so I got you. So depending on the direction of the market, depends on how you draw the figure.
Yeah, for me, I'm a very how do you say that? I'm a very analytical person. I have to have everything straight. You know what I mean? I'm like really, you know.
Yeah, me too. OCD.
Yes, there you go. OCD. So my 0 is going to be where I start. My 100 will be where I finish.
Okay, and so I got it. So the A is the top, the B is the A is the 0, the B is the 100, the C is the highest point, and the D in the fib. So the D is. Do we have to put those measurements in the fib, or do they all automatically all come in the fib?
I'm gonna share some screenshots with Jenny.
Well, actually, can you just go to your settings real quick? If you right click on it.
To my, oh yeah. I'm. You know what I'm gonna do though, Jenny? I'm gonna share them with you on Telegram, and then you can post it to the group. I guess. I don't know.
All right, cool.
Well, I'm about to say we could screenshot it right this second if you just click. I'll screenshot mine.
All right.
Yeah.
So if you right click on it, guys, what will happen is you'll see all the additional levels he has. He basically just has the plus and minus levels, and then a couple extras actually, now that I'm looking.
Yeah. Now, see, guys, this is the thing. Now, nobody can tell you where the market is going because you know where you are at each and every point. As long as you identify your arrow, you know that already. Or, okay, let's say we didn't have the arrow. Look what happened between the green and the red arrow. The green and the red arrow, there was a shift in the trend, right? You had an uptrend with the green arrow, and then all of a sudden, where the red arrow is, it's a downtrend. So that's going to be your new AB because the trend shifted. So that trend is no longer valid, the old one. You get what I mean? Anything before the red is no longer valid because the trend went from it made a V, right? So now that trend, the old trend is no longer valid because the old trend was, it was coming up, and all of a sudden it made a quick turnaround. So now this becomes a new trend. So, that's why I love the big arrow. I don't use anything else but the big arrow because it just pinpoints me to the right direction. That's all it's doing for me. And as you can see, this is what I use. I use nothing else. I use the MACD for power, for strength, but that's about it. You know what I mean?
I have a question.
Yeah.
Is your A to B always going to be an impulse move?
Most of the time, yes. I would say about 65% of the time. I'll show you one where it was not, right here. It doesn't always have to be an impulse move. I'll show you why. Sometimes it'll be shorter moves. And, I'll give you an example right here. This is a very short move. So for example, here, right, we have our AB, right, which is the lowest point before a U-turn, and then the 0. So A to B. Here's my C at the 23.6. Now, here's the funny thing. This is one thing you guys should definitely keep note of. Whenever you hit the 38 or the 23, the market is going to have a huge impulsive move down because those levels are too short. You know what I mean? They're very short. So look at the impulse that it made to here. It went way past the 1618 in one move. One move. No blue candles here at all. You see that? Let's get a closer look. A, B, C, and look where it hit, 23 and 38. That causes the market to just rally all the way down like no tomorrow because these levels are very short. You get what I mean? When it goes into the golden ratio, it's a slower pace down. But when it hits the 23 or the 32, excuse me, the 23 or the 38, you're going to get such a huge impulsive move down. And this is our D right here. This is our D extension right there. This is our
so much great information, mate. It's unbelievable.
Yeah. So listen, nobody can ever pull a wool over your eyes again. You're going to know where you are in the market no matter what. Nobody can do that because let me tell you, the guys in Wall Street, this is how they trade. Fibonacci all the way. I'm like, wow. And I'm sitting there like just, and wait till I show you the next thing because this is how you're going to be able to know certain conditions in the market, right? So again, just to recap, let's go to another setup, right? So I've got my agreement. Let's go to somewhere else. Let's see who else we got here. Let me switch my template. This is too light. Black. Okay. All right. So, well, here the thing is, I really wouldn't mess with this because as you can see, they're not agreeing. Well, actually, hold up. No. Let me back off. The monthly is on an uptrend, but everything else agrees. So yes, I will do it. Remember what Uncle P says, 1 to 2 time frames higher and you're good, right? So
Yeah.
that's exactly why we will take this one, right? Okay. So let's go ahead and start, right? So let's say right here, right? I got my, make this a little bit bigger. I'm on the daily, right? So I see that my weekly and my daily and my 4 hour are green. Cool. Okay. Let me look at the daily and see what's up. All right. Perfect. So I'm at the daily now and I'm plotting, right? I'm like, okay, cool. I'm going to plot this. And I want you guys to get used to plotting the old information so you know what's up with the new one. Kabish? Okay. So we got it over here. We go from our lowest point before a turnaround. And what I mean by a turnaround is any U-turn in the market. This is not a U-turn. This is just literally an institutional candle. That's a big guy right there. That's a lot of liquidity there. But so we're going to take it from the bottom, right? Up. So that's going to be our AB. This is our A. This is our A. That's the 0. And this is our B. That's going to be the 100 line, right? So I got my first 2 plotted. Great. Awesome, right? Okay. So what am I going to do next? I'm looking for my C, right? Now my C is going to be the highest point. Well, as you can see over here, it looks like the pattern didn't complete. Hold on 1 second. No, that's why. Okay, my bad. I gave you guys some information that was incorrect. This is a U-turn. There's a U-turn because there was an initial red candle. I apologize for that, guys. Yeah, so this is actually a low. My bad. It is actually a low because the U-turn happened when the red candle formed. If it was just a little dot, then it wouldn't be a U-turn. But this is actually, this is going to be my low. If the, let me give you an example. Okay, see here, this right here, that's not a U-turn. Sorry, I made a mistake with the candle form. This is not a U-turn. See that little candle there? That's not a U-turn, but this is definitely a U-turn because the market went up, U-turned up, and then went back down. So my bad on that.
That first one's got no body to it, but the second one has.
Correct. This is not a U-turn. This is literally a fight between us retail traders and the rest of the retail traders trying to make the market go the opposite direction. But this is actually an institutional candle, so it is a turnaround. All right. So my low literally will be at the wick of this the last candle before the blue one, right? So this is our low here. So it'll be AB. We're looking for our C. So the C that we got is going to be the blue candle, the institutional candle at the 618, right? And okay? So let's get a set of rules here. When we find our AB, what's the next thing we look for?
C.
Correct. We found our C, right? And then what's the next thing we look for after we find the C?
D.
Well, before the D, I want you guys to get used to this. We look for where is the money?
Yeah, where's it going to? Where's the money? Yeah.
Yes, where is the money? So we look left, right? And we found it. I found my money right here. This is my money. In New York, everybody has this thing about money, and money's always in everybody's mind. That's where all these songs come from. So here we go, money. So my D extension, now that I know where my C is, right, because it happened rather quickly, my C is going to take you down to the D extension, which is going to make sure that the money's taken out. So when I see this thing going down, look how many pips it's going to be for. And let me show you something. It looks even more sexier on the 4 hour. I want you guys to get used to plotting it here, but then going to the 4 hour to execute, right? Okay, so here we go. Here's the 4 hour. It's easier on the 4 hour. Don't try to do this on the daily. You get what I mean? If you're good with the daily, I would say okay. But if not, don't mess with the daily like that. Plot your AB on the daily, right? Plot your AB on the daily. Keep checking for your C, right? And then you want to go to your check where the money's at, go to your 4 hour, and then that's where you're going to find your entry on the 4 hour. Why? Because look how slow the 4 hour moves compared to the daily, right? Once you set your AB bound, boom, here we go. And then you're going to get your next arrow once you've completed that pattern. You get what I mean? I'm going to do one more just in case you guys don't have it.
Hey, Rich, can I interject real quick for everybody who's listening? So there's a lot into this. And granted, everyone has different terminology. Some of it's more Wall Street based. Some of the Wall Street based stuff is, becoming, I don't want to say outdated, but definitely changed. So when you say ABC pattern, you do realize that that's the second part of the Elliott wave theory, right? The Elliott wave theory is the first pattern, and then ABC corrective is the second, right?
Well, actually, you know what it is with the Elliott wave? The Elliott wave goes like this. This is your wave 1, right? Wave 2, wave 3, wave 4, which cannot supersede wave 1, right?
Yep.
And then wave 5.
Yep.
You're still doing an ABC pattern, ABCD pattern. A, B, C, D. Now, that's the one thing I forgot to tell you guys. When you have an ABC pattern, right? This is your A, B, C, and then this is your D. When you refresh, your C and D becomes your new A and B. So A, B, C, D, C, D, that's your new A, B, C, D. So that's why the Elliott wave corresponds directly into this. The Elliott wave, though, at the A, B, C pattern, because there's no D on the Elliott wave. It's 1, 2, 3, 4, 5 A, B, C. That they use for harmonic patterns, which I don't use. Nobody in Wall Street uses harmonics. Harmonics is I'd like to say a 1 in 50 chance that it'll work. Yeah, but A, B, C, D patterns happen everywhere in the market, and it always happens. It's just like, yeah, so it's A, B, C, D. You're always going to see them. And then A, B, C, D. See what I mean? A, B, C, D. This is your C and your D. This becomes your new A, B, C, D. It just continues repeating. So, like, this is how you want to literally plot your daily. You want to plot your A, B, C, D on your daily, and then you want to make sure that you continue to monitor it on the 4 hour, where you can find your entry much easier. Also, the pips on that is incredible, because no matter what, you'll know where you are in the market. Nobody's going to be able to fool you and say, hey, this thing's about to go down. You're going to look at it, you're going to plot it, and you're going to say, nope, it's not going down, it's going up. How do you know? Because we just formed our C, so now it's going to take off. You know what I mean? Somebody tells you, all right, this is your AB, and this is your C forming, right? It's not there yet. And then somebody's going to say, hey, this market's going to tank. Oh my God. Say, nope, no, it's not. It's going to form a C and then shoot up, because now you know. You get what I mean?
Yep.
Yeah. So at least you know where in the market you are, and you can plan ahead and be able to take better trades that way. Let's see. The last thing I wanted to show you, so we can kind of wrap this up, is okay. So one of my friends who trades only gold, right? This guy, he works for a big hedge fund company. He gave me this idea. So you go to barchart.com, right? This video will be recorded, so don't worry about, you can just rewatch the video, and I'm going to show you how to get your answer on where is gold going, right? You go to select a commodity, and you're going to go to you're going to scroll down metals, gold, right? It's going to bring up a new page. And then you're going to get a chart, right? This is literally, remember one time I talked to you guys about COT, commitment of traders? This is where the big guys have to report what they're doing. So this is kind of intertwined with that. So we don't even have to look at numbers and charts anymore. We just look at one pattern and we're good. So The first one's always going to be cash. Ignore that one. We don't care about the cash part. It's going to be the next one below it, right? So the very first date below the first one that says cash. So we go into that one. It's going to bring up a new chart, right? The little chart is much easier. We're going to go to full chart. Full chart over here. And this is how I've been able to predict where the hell gold is going. And people are like, how do you know, bro? And I'm like, when you know, man, you know, like, but yeah, like, you know, that's a New
You're
York.
Nostradamus of the gold, mate.
Yeah, that's a New York always trying to pull the wool over your eyes. You know, when you know, but it's not. This is how I know. This is the truth. All right, once you're in the chart, right, you're going to have this beautiful chart right here, which tells you everything that hedge funds and everybody's doing. So the first thing you want to do is make sure it's on 2 year, because it's going to give you a lengthy chart. The second thing you want to do is go into your study, right? Because this is what's going to tell us. So this one usually is like this, right? Volume and open interest. We're gonna take away the Illuminati eye on this one. And we're gonna keep, yeah. We're gonna keep only open interest, right? We're gonna take this one off and just keep open interest and press apply, right? And then this is the beautiful chart that we're gonna be looking at right here. Now, what is this? This is literally the commitment of traders, right? And everything else in one chart, right? So we want to do is we want to expand this, because then it lets you see what these people have been doing. And by these people, I mean the big guys. This is how you're going to look at this and read this. When this purple line is only sells, it doesn't put in to play the longs. It only goes into play with shorts. So if that's the case, when the market's going down this way, that means that they are getting rid or selling shorts, getting rid of their shorts. Look what happens to the market. As we're coming down, the market's going up. Why is the market going up? Because they're getting rid of shorts. When you get rid of shorts, what happens? The longs take over, right? So as you can see here, as we progress, the chart's always going to make a opposite, kind of like almost like what you would say standard deviation. Same thing. This is the same thing that applies here. Now you can see we're adding short, adding short, adding shorts. What's the market doing? The market's trending downward. Why? Because we're adding shorts. We're putting in more shorts. That's going to bring the market down, right? And then over here, we're adding shorts again. And as you can see, the market kind of, we're doing it in waves. So the market's waving as well. But look what's happening today, right? Today, we're actually getting rid of shorts. And what happened to gold? We went from $1,900 all the way up to $2,000 now. Why? How did I know that? Because when we were here 3 days ago, I said, guys, the market's going to go up and everybody's getting ready to sell. I'm like, don't do it. You know, everybody's like, dude, we got to sell. This thing went to the top. It already passed the liquidity from 2011. Don't do it. And they're like, how do you know? I said, trust me. And they're like, nah, we're selling. Do you know how many people lost money in the last 3 days? I didn't. Why? Because look at this. They're getting rid of their shorts, which means everything's going to go long. Guys, this is an amazing thing. And this is free. Free. You know, in New York, we don't pay for anything, right? We get in the club for free. We get drinks for free. Free. You know how it goes. So now, if you want to look at this as far as currencies, you could do the same thing. If you want to look at GBP, only GBP, Great British Pound, right? Guess what I found out? Great British Pound is going to be going down the whole month. Thank you. That's why I'm shorting all the GBPs.
You dropping gold bars.
Oh man.
Yeah.
Man.
What?
Yep.
Right, he's dropping bullion bars, man.
Truckloads, man, truckloads.
Thanks, Jenny. I owe it to you.
See, now this,
Wow.
When this starts going up, guys, it's time to sell. And when I mean sell, this is what I want you guys to do. I want you guys to get used to this. Do not take profits. Don't use that. Take profits are garbage. It doesn't work. What I want you to do is, now that you know somewhat how the market is moving, set your entry, right? Use your big arrow, set your entry. Once you know the big arrow has already beat the last big arrow or the last big spot of liquidity, and you're sure that big arrow, it starts moving downward and you get in the market, the first thing I want you to do is when you move 30 to 40 pips, take 30% off. I'll give you an example how that works. Okay. The first thing you want to do is you want to double click on the name when you bring up, hold on, let me see that one. Okay. So I'm in here, right? I've got my I've got this, right? That shows you all the trades you got open, right?
Yep.
You're gonna double click on the name, the symbol. So for example, GBPJPY, double click. This is how you're gonna do it. You just moved 30 pips. Okay. Now you're gonna say, hey, I'm gonna drop down 30%. How do you know what's 30%? Okay, I got in at a mini lot, right? A 0.10, right? $1 a pip. So I just made 30 bucks. Great. I'm gonna go in there, double click on the symbol, whatever moved 30 pips for me, it's gonna open up. I'm gonna shrink. What's 30% of 10? 0.03. So I'm gonna close 0.03 and leave 0.06 open. So I just paid myself, right? And the market's gonna keep moving, keep moving, keep moving. When you move 60 pips, I want you to go back in and do it again. And I want you to go and put in another 0.03. That's another 30%. And I want you to take that out, pay yourself, right? And the rest, you're gonna leave running until the next arrow. Don't trade with take profits. That's gonna mess you up big time. Always use a stop loss. Never trade without a stop loss. If you put a stop loss in, maximum 40 pips. Like for example, gold, GBP, 40 pips.
Hey, I'm going to interject there. That is a hard and fast rule for some strategies, but not for all strategies. Because like, for example, if you're scalping, okay, if you're like in and out of the market, so intraday or less, scalping or less, having to take profit might mean, so I'm going to interject, just teaching moment so we can all hang out, but they love you.
Yeah, I don't scalp. I don't like that. I don't want to be like biting my nails stuck on a computer all day. You know
No, you're totally fine. So I'm going to use my drawing here. I'm going to pick a different pretty color, something in pink. So for example, if I bought here, okay, and I wanted to catch some of the move, I can, especially depending on the strategy, I can hit this take profit. I can take another entry here, hit this take profit. Like hitting a take profit versus waiting for it to pull back after you protected versus waiting for this candle wick to pull back and then you're losing some. There is an advantage, like we talked about earlier, of having a more modest take profit that you hit more regularly. And it's just a different kind of concept. So I understand your rule about not having or at least leaving one open runner, but I will interject, if you're intraday trading or scalping, please keep using a take profit. It's better hitting that than only hitting like two little pieces.
Yeah, this is for swing trading, you're right.
Yes,
yeah, this is for swing trading.
Okay.
Yeah, you don't want to mess around with take profits when you're on swing trading. And also, guys, set alerts. I don't know if you guys knew this, but check this out. Okay, the triple arrow, the big arrow came out here, right? You know you're not getting in. Why? Because look left. You know you're not getting in. So what am I going to do? How am I going to, I might miss this. So what do? Check this out. Trading, alert. Look at it right here. I know it's a little hard to see, but you double click on it. Oh, why is not letting me do anything? Well, this alert, let me see if I can set a number because this thing is not playing right. Oh. Jenny, did you block me?
No.
That sounds like a window's popped up somewhere.
Yeah, I got you. So,
I don't have that much control or power. Sorry.
So check this out. When we have our D extension, right, the 618, that's approximately where I want to put this alert. So what I want to do is check this out. I want to put an alert. I like this alert myself because it's really freaking annoying and it wakes me up out of my sleep. So I'm gonna put it for about 1 hour and about 10 ticks is okay. Check this out. When the market touches here, look where the arrow came out. When the market touches here, you're gonna hear that alert. And I set my volume all the way up. So that thing wakes me up out of my sleep. Or let's say I'm, again, like I said, I'm not stuck on the chart. So when the market hits that alert, it makes this really loud noise that annoys the crap out of everybody. And then, it keeps doing it because the market doesn't just go by and swing by and that's it. It goes down, it activates, it comes up again, activates, it comes down again, activates it. So everybody's going to get annoyed like, hey, shut that off, So now you're like, oh, my triple arrow is about to come out. And look what happens. As soon as I set the alert, boom, right? There you go. And there's my fib was here, right? AB, here's my C, the extension over here, right? So like, again, you set everything up so that you know what's happening next. You know what I mean? So when you're swing trading, that's why like Jenny's right. When you're not swing trading, you definitely want to set take profits because then, if you're going for short, it's going to take you out. But for swing trading, look at these moves. I mean, you don't have to set no take profit because then you're going to miss out. Unless you use the fib to set your take profit, maybe, but you still miss out on a few pips. You get what I mean? You still miss out on a few pips here and there. So like I don't give anything back. When I go into the market took enough from me already. That's it. I'm getting every little penny that I can from the market.
Okay, so I'm going to ask a question for everybody who's not asking this question. If you're advising people, so here, let's take this move. Let's just use what's in front of us and not look for perfection.
Yeah.
Let's say we took this move. Okay,
Yeah.
let's say we took a re-entry even. So you're saying don't use to take profit. So when do you get out?
When do you get out? Next arrow.
Okay, now mind you, that arrow was probably, it could have been here, here, here.
Yes.
Still not there.
What's the rule? What's the rule about getting into arrows? Look left. Look left. You got to take this money out. If you're not taking the money out, you shouldn't even be looking at that damn arrow. You should be like, shut up. That's it. That's exactly, the money's sitting here. Why would you try to jump in here or here or here? You want to make sure the market goes through and swipes. And you gotta say a prayer for the poor retail traders whose money's sitting over here, right? Say a prayer for them and say, I'm waiting. Once it breaks that, that's when you get in. So always look left. Don't forget. You never jump into an arrow until you know what's up.
Hey, Rich, I got a quick question.
Sure.
On that bar chart, can you go back to that bar chart you had?
Sure.
Jenny, thanks for going long too. This is really good information.
Well, I'm glad. And thank you, Rich, for stepping up. Because again, no person is an island. So we all get to contribute. And I'm grateful that he's willing to. So that's awesome.
So on the bar chart, on your purple line at the bottom, where it's going straight, is that what you consider in consolidation? Should you even be trading in that? Or like what direction is that?
Well,
up or down?
So the purple line is shorts. It represents shorts only.
Got it.
Okay?
Got it.
So there's no longs in here at all. So what happens is when you're adding shorts, what's happening? It's doing it in little mountains. So what's happening? The market's going up, down, up, down, up, down, up, down, right? But now here, look at this swing. They really sold their shorts. They got rid of them, got rid of shorts. When you get rid of shorts, what's left over? All of your longs. Look what the market did. This is the actual gold market. This is institutions and hedge funds that are selling shorts or buying shorts.
Now, can you scalp that, or is that strictly for swing trading?
Swing trade. I would not scalp with this because, so let me show you what I mean by that. You see over here with gold, this is exactly what we're looking at. This is the same thing we're looking at. You see that? Once they started selling shorts, right? They started selling their shorts, right? You saw that they did this, right? If you're selling shorts, what happens? You're leaving your long, so people are going long, right? Now, it's so funny how this coincides exactly with our Fibonacci. Look where the D extension is. It's all the way up here. So should we start selling? No, because first of all, they're still getting rid of shorts, right? As you can see on bar chart, they're still getting rid of them. They're still getting rid of shorts. So this market is going to just keep on going until you see something turn around and come up. Then the market's going to come down. It's like a standard deviation. So basically, if on the purple line, right, they're going down, then the market is going to be going up. Why? Because the purple line only represents shorts. So if they're getting rid of shorts, the market has to go long because they're only leaving their longs, right? But if they start to add shorts like this, now you're going to see the market. You're going to see the market actually do the opposite thing, because if you're adding shorts, what does that mean? If you're adding shorts, you're actually closing longs, so the market's going to go short. You understand? The purple line is only shorts. The purple line does not represent longs at all. It doesn't factor them in. It doesn't take them into consideration at all. It's short only.
And what time frame would you recommend using this chart, the 4 or the daily?
Which one? The bar chart?
Yeah, the bar chart, if you're looking for those swing trades.
The daily, you set your fibs, and you're going to see the fibs are going to match this. Look, A, B, C, and D. A, B, C, D. And we're still waiting on our D, so nobody should be trying to sell right now. As a matter of fact, if you want to get in, you still have quite a ways to go. This would be a nice retracement if you catch it the right way for at least another couple hundred pips, at least. And again, keeping an eye on bar chart. If this thing turns around, you definitely want to be prepared to sell.
Thanks, Rich.
Cool. Definitely. But yeah, I mean, there's a lot of, like, Fibonacci is amazing. It's like one of the things that once I learned it, it just, like, I see the market totally different now, totally different. It's not the same market to me. It's like, I know you now, you cannot get away from me. That's it. I know where you're at, where you're going, you know. Obviously, you can't be precision, because if that was the truth, then I'd be a millionaire already, but it's not. But at least you know what to expect next. And you won't get caught out there really badly. You know what I mean?
I got a question for you.
Yeah.
Now, the candles, like, how can you tell when the institution get in? Because I know they be long and stuff, but sometimes they be like, don't get in. It's too late, because you be in that trend for a while. So how can you tell which is when the institutions get in beside the long candles?
Usually the trend is going to be massive. So for example, all this, there's no institution anywhere here, except for maybe this one. But there's a reason that they're doing that. The reason they got in here is because they're trying to push the market up further to do this. I mean, listen, one thing I can tell you is the powers that be are not on our side. They are not on our side at all. They don't care how much money you got or how little or how much. They don't care. They want to take it. So look what they did here. They got in a few spots to push the market faster. Once they got here, right? What do you see? What do you see here? Institutional candle, big wick, big candle. But look what they did. They made it look like they were going to go down. Boom, exploded back up. You see what I mean? So you always have to, institutional candles are this is where they make their mark. They're always going to leave a clue. Always. There's always going to be a clue. There's never going to be somewhere that they don't come in where you can't tell. This is institution right here. They're pushing the market up. And how do you know that? From this. They're selling their shorts, causing longs to go stronger. They're selling their shorts, causing longs to go stronger. Right? Over here. See this? Same thing. Like all these different patterns is how you're going to know. Like this little bar chart thing was an amazing gift. You know, like they added shorts. Now all of a sudden you get a dip in the market. See, everything coincides with this. It's exactly how it works. So your next step for gold is once they start, I can't annotate on this, but once they start adding, this market's going to dip because the market does exactly the opposite of the purple line. So remember, it's a deviation. So if the purple line is going down, the market is going to be going up because this means they're selling shorts. So they're only leaving longs. So the market has to go long. Incoming mail. Remember, these guys, you're talking about millions and billions. You know what I mean? But the moment that they start adding shorts, now they're adding shorts. What happens when you add shorts? You have to close your longs. Now you're going to see this effect. Now the market's going to start dropping because they're adding shorts.
Wow.
So yeah, just be prepared for that one. Keep checking that on a daily basis, and because gold is going to crash hard. If you want an example, go back to 2011 on the monthly chart and see how far down that thing. It went down about 8,000 pips. Once you catch the right structure, you can get in with a pretty decent size. I would say like maybe $5 a pip, and just let it ride. Don't touch it. Forget about it. Protect it and let it ride down. Let it ride.
That's just
down.
like printing money.
Yeah, you're gonna be an ATM. ATM. Yeah, it's an ATM.
Bring them trucks in.
So yeah, the only thing you need to do is check your account, once a day and get excited about what you see.
Wow. Beautiful, beautiful.
Yeah, man. I don't even talk on here, but you and Jenny, man, you kind of got my brain like turning. It's starting to turn into a Forex cauliflower now. I'm like,
I don't know about brain turning, but holy hell, man, that's just giving us a lot of homework to go and check out stuff. And wow, that's just opened the eyes up so much. It's not funny.
I mean, man, y'all dropping stuff that even the YouTube and them really can't show that because y'all shut them down. I mean, I'm glad I joined. I'm not even gonna lie.
that information that just got sent out then was worth millions. Millions.
Okay, Rich. Well, they're singing your praises, so that's awesome.
Yeah, let's get real, folks. Let's get real. Like, you don't hear that information getting shared freely. Like,
no, you don't. No, you don't.
Pay for that sort of stuff.
Yep, I agree.
Well, hey, guys, kind of the whole point to all this is kind of just as we accumulate information, we share it. Like, and it's not going to be for everybody. People are going to come and go. It's going to be over some people's heads, and that's okay. But the longer we just like-minded people come and share their different perspectives, none of them have to be the golden ticket, but just accumulatively, it's a lot of information. So
yeah.
Oh yeah, I think I'll be watching this over and over and over and over again. So it's just burned into the brain.
Back test a lot, guys. Practice, because that's how I got good at it. Because when I saw this, right, when I first seen this, I'm like, holy crap! I'm like, Jesus, this is amazing. And then I went home and I'm like, oh crap, what was it again? I was like lost. But then once I went back and back and back and back and back, I'm like, aha! I finally got that moment where I'm like, gotcha. Now you're in trouble. Now I'm making trades where it's like I catch my C and I'm making, like, again, why don't I like scalping? Because scalping, I'm already, I mean, you guys can tell, a super hyper person. It's a New York state of mind thing. The island is very, the whole 5 boroughs, it's just like an energy thing. So we're always hyper here. For me to sit in front of a chart and babysit that thing, watch it, and maybe it starts to go against you, I can't take that anxiety. It's too much. It's too much. So I can't do that. I can't scalp. I tried it, and I think I had no fingernails. Yeah, I was throwing stuff. I almost broke my monitor. You know what I mean? I was like, no. That's, like, I thought that's what trading was. That's what I thought it was. I'm like, is this trading? Hell no, I'm not doing this. But then, they're like, no, hold on a second. Yeah.
Hey, Rich, how often do you find a setup?
There's 28 pairs. There's 28 pairs. Every day you can find 1 to 2 setups. I wouldn't do more because, okay, here's the thing. When you get really good at this, you're going to want to go ahead and put money into 6, 7, 8 pairs. Don't do that. Don't do that. Why?
Over leveraged.
Yes. Thank you, Jenny. That's like, you know, you want to keep your account. You can't control everything. If you got 6 to 8 pairs out there, you're going to be going crazy trying to control everything. Pick 2 good pairs, 1 GBP pair and maybe 1 USD pair, and master them.
Yeah, no more than 5%. Hey.
Yeah, I mean, no more than, I would say, yeah, 5% is the max, and you got to split it in half if you're doing more than one. You see what I mean? You got to split that in half. Now you got to do 2.5% on one and 2.5% on the other. You don't want to over leverage. You want to keep your money. You want to keep your gain.
Oh yeah, you want to be able to fight another day.
Yeah. And once you start doing this thing over here, you're gonna be seeing things you've never seen before and doing things you've never done before. And you know, hopefully you guys can pass the information on to others that need it, because I know not everybody jumps on these calls. So, you know.
Yeah, no, for sure, man.
That's awesome.
Thanks very much, mate. That's fantastic. Fantastic.
All right, guys, I'm going to go ahead and cut this short now and say thank you again to Rich for always volunteering to come and hang out and, you know, share knowledge. I cannot do this without the amazing people and to kind of share some love that we have in this group. So we're creating just an amazing group of people that I could not imagine the world without. So again, thank you, Rich. I super appreciate you.
Oh, my
Hey,
pleasure.
one more question.
Yeah.
Rich, do you have any social media sites that we can follow you in
Hey,
case we have any additional questions?
We can't do that because if I do that, then I'm going to allow cross recruiting, and then that's kind of in conflict with SuperEZ. So like, we're trying to create a safe space where we don't DM each other, we don't private message each other, we allow each other to have our own safe space and private place. But where the people who are wanting to and willing to step up and talk, great. We just can't bombard them, because then first off, I'm going to get in trouble, and then it's just a whole thing. So yeah.
Okay.
Sorry.
All right, sounds good.
I would
Thank
say
you.
just watch the videos. You know what I mean? Like, keep watching the videos, because that's how I learned. I recorded what I did, and then I kept watching it and kept going back testing. Once you get good at it, it can't be erased. You know what I mean? That's the one thing with knowledge. You can't take away knowledge from anybody.
Are we recording this video?
Yes, sir.
All right, awesome. Thank you.
You are welcome. All right, guys. Well, thanks again, everyone who comes and hangs out and is super loyal. And I super wish you guys the best of luck in your trading journey. Please write down any questions you may have for next week, because more than just clicking through some pairs, I'd like to just go over real deep knowledge and go over all the different things that we can. So I hope you guys all have an amazing day. I will talk to you soon. Take care and God bless.
Thank you,
God bless.
Jenny. Thank you, Rich.
Thank you.
Thanks, Rich. Thanks, Jenny.
All right.
Take
Catch you
care,
on
Rich.
next time.
Thank you, man.